friends, I'm back with one more video. Okay, this is a sort of follow-up session on Ironfly, right? We have already discussed what is Ironfly. So later I've realized I should have told you why do we deploy Ironfly, when to deploy Ironfly, and how to deploy the Ironfly. Meaning, see, we have discussed about what is Ironfly. Okay, so you can just go to my playlist. You can watch the entire series. So we have started with what is Ironfly. Okay, let me show you the playlist. Okay, so this is the entire playlist, friends.
Wix to
Okay, so we have almost right 7 to 8 videos, right? So these are the prerequisites. We have part 1. So this is the follow-up session of part 1, right? So wherein we will be discussing about when, why, and how to deploy the Ironfly. So we have part 2, right? So watch it in sequence. All right, so let me take you to uh, back to my slide. Okay, so basically why do we go for Ironfly? Right, there should be only one purpose. We go for Ironfly when, see, right, view, market view is very important. See, whatever strategies you go, right, sorry to say that we should not predict the market, but at least someone should have the view of the market, whether the market is bullish from here or the market is bearish from here or the market is sideways. Yes, we know that we cannot even predict the market for the very next second, right? But where is the point that we need to have the view, right? But at least your price action, your so-called price action, or your indicators, whatever indicators you're using, right, it will give you some heads up in terms of coming up with the right, identifying the view. So anywhere, anytime, right, any strategy you go, you need to have the view of the market. So we go for Ironfly. We go for Ironfly when our view is range bound, when a view is market will remain sideways. Check the payoff graphs. You will get the profit only when the market expires between this green area, right? So what does that mean, right? Market should be sideways. If market becomes momentum on the upside, you will end up into losses. If the market from the current market position, if the market comes down, right, if it keeps going down, you will get into losses. So what is the view, right? Why do we go for Ironfly, right? The basic purpose, the basic view is market should remain range bound or sideways. All right, view is very important. View is very important. All right, so let me show you one example. Okay, let me directly show you one example using the chart. Okay, see, when I say view, right, we can deploy the Ironfly somewhere here, right? We can deploy the Ironfly somewhere here. Reason is, let's assume this as your resistance, right, which has acted as a resistance. See, one time, two times, three times, see, almost four, right? In future also this will act as a resistance, right? The green color one is your support. See, this has acted as a support. See, this has acted as a resistance one, right? Support one, support two, third time support, fourth, fifth, sixth, seventh, right? So this is the way we need to get the view of the market. So let's say your market, see, currently your market stands here. This is a very good example, right? What is your view now, right? Market can go up from here, right? That will take the resistance here, or else market will come down and take the support here. All right, so what did this found? See, market is here, right? The moment I said market will go up and market can come down and take, so don't you think this is the Ironfly? This has made the shape of Ironfly. See, don't you think this has made the shape of Ironfly, right? Okay, the same way, see, we have the shape, like triangle shape. Don't you think the same thing has formed here, triangle shape, right? So this is the way we need to deploy the Ironfly. So let's say your market stands, let's say your market stands here. Does it make sense to deploy the Ironfly here? No, right? Because market can come down from here, right? If market has to come down, it will fall steep, it will come down. So we do not have, if market goes up, right, whenever there is a breakout. So these are all the breakouts. So take an example of this thing. When you have deployed the Ironfly here, right, market will go up like anything because this is a breakout area. After like almost from, say, July 10th, right, this is a July 20 or 2020 till here, right, almost 27th August, this was ranging in a range bound market. See, right, this was almost in the range bound market, but here The moment it took the breakout, it flied like anything, right? That's the other case. Again, market will come down, it will retest here, it can fly from here also. Once it retest here, it can fly from here also. But market is supreme, right? If analyzing the market is so easy, right? So everyone would have been become like, right? Everyone would have earned a very good profit from the market. But market is supreme. Okay, so let me remove all this thing. Okay, so what do I mean to say is like, whenever market stands here, this was a very good position for you to create the iron fly, because market will go up, it will take the resistance and it will come down, or else market will go down, it will take the support and it will come up. So let's say you have deployed an iron fly here, let's say, right? What did happen? Market went up, right? It took the resistance, right? It did not breach your break even on your call set break even, right? Again it came down, right? It was here, again it came down. So your market ended between your sold position, between your call sell and put sell. So you are in a very good profit. So friends, I'm able, I think you're able to get the context, right? So the deployment of Ironfly is very important. You need to have the view of the market. You cannot deploy the Ironfly here, right? It is a risky area, because what if market flies from here, right? We need a sideways market for Ironfly. We need a sideways market for the Ironfly, right? We do not need, we do not, Ironfly is not compatible with the this kind of market, momentum market. We need sideways, we need this market. That's the only purpose of going for Ironfly. Why do we need the sideways market? Because we need theta decay, we need to get the benefit of theta decay. With the sideways market, what will happen to your VIX will go down, right? With the momentum market, though VIX will go down, but the market will breach your break even with the upcoming, right? If the market comes down, right, this is a very bad combination of Ironfly. Whenever the market is falling down, it's a very bad combination, because VIX will go up, which will shoot up your sold legs premium. You will end up into losses. So we saw why we go for Ironfly, right? With the only purpose of, with the only view of market being range bound. All right. So you cannot see, you cannot go for Ironfly at this position, right? So if you have deployed Ironfly at this position, see market went down, because this was a breakdown. See, whenever we have breakdown or breakout, right, market will move like anything. See, such a big move, right? If it had such a big move, just imagine, right? With such a big move, your VIX will increase like anything, right? Increasing VIX will give you panic to your sold positions, meaning that will give panic for your sold position. Increasing this will increase your premium like anything. So your entire trade will come into loss, right? Your entire MTM will show you loss, right? View is very important, right? Falling market is not good for Ironfly, right? Needless to say, I've made many videos on VIX based and everything. I even have covered as part of this video, right? Prerequisite, this is very important, friend. Prerequisite 1 and prerequisite 2. What I said, rising VIX is friend of option buyer, rising VIX is enemy of option seller. Watch these two videos. I'm not going to repeat everything here, right? Now, when should we go for Ironfly? That's the biggest question, right? When should we go for Ironfly, right? Whenever we have high premiums, right? Ironfly requires high premiums. The reason why we go for high premiums, like we get high range, okay, and the probability of getting good profit is more when the VIX is more, right? Right, many of the traders or many of the YouTubers say that we need to go for Ironfly when the VIX is high. But friends, even there is a logic. See, what do you mean to say like VIX should be high? Let's say, right, this is your VIX is going high, right? Your, this is 10, and let's say this is your 18. VIX stands at 18, right? This is a very good area to go for the Ironfly, because we will get the very good range, right? But the view of the VIX should be from, see, premium should be high, point number one, right? VIX should be high because you'll be getting high premiums, but from 18 VIX should not go up, right? From 18 your VIX should come up, then only it will give you profit. See, there is no point in saying that okay, we need to deploy the Ironfly only when the VIX is high. Yes, when the VIX is high, right? When the VIX is high, the premiums will be high, right? You will get bigger range in Ironfly, you will have more probability of winning. But It should not be the other way, saying that your VIX stands at 18, but if the VIX keeps going up, right, right, VIX going up will increase the premiums, right, and that will increase your what, your sold position legs. So then you'll come into loss. So meaning VIX should be high, but it should be falling from there. It should fall from there, because falling VIX will decrease your premiums, right? And this combination is good for your two soul legs, because end of the day this has to become zero. This is your profit, this two soul. So decreasing VIX will give you more of decay, right? On the expiry day this has to become zero. This is your profit. Okay. What do you mean to say? VIX should be high, but it should not be going up when you deploy the Ironfly, right? It should come down. It's not easy, I know. It's not easy to analyze, right? To come up with a view, but you need to take a chance, right? You need to do some sort of analysis, right? Based on news, or based on how much the market has already made. See, market has made a steep move. How much steep it will go, right? Some way it has to come down. So it has come down, right? You need to have such sort of analysis. Maybe the previous week, right, the market might have made a very huge move, right? And then what is the probability of market coming down? High, because market cannot go like double triple, right? It has made such a huge steep up move. So then it has to come down. So it has come down, right? So this is one of the example I am taking, right? So let's say you have deployed your Ironfly here when the VIX is 18. You got the good range. Now the VIX keeps going up. Okay, then the VIX keeps going up. Definitely your Ironfly, you will be in loss. 100% you will be in loss, because rising VIX will increase your sold position premium. What you have to do from 18, let's say it came to 22, right? The best thing would be exit this trade, right? Exit this trade, accept this loss from 18 to 22, accept this loss, and deploy a new Ironfly, right? Deploy a new Ironfly here when the VIX is at 20, because the probability of VIX coming down is more high, because already it has made a huge spike from 10 to 18, and we thought from 18 it will come down, but again from 18 it went to 22. But now the probability of VIX coming down is high. So you can deploy a Ironfly here. You'll get good premiums, right? Though you have accepted the loss here from 18 to 22 in your Ironfly 1, right? Exit that Ironfly with the loss, and deploy a new Ironfly at 22. So what will happen? There are only two possibilities, right? If the VIX comes down from there, you will end up into huge profit, right? If the VIX again keeps going up, right, definitely your second Ironfly will also be in loss. Exit the second Ironfly with limited loss, because end of the day your Ironfly is a risk defined strategy, right? Exit the entire Ironfly with the loss, and then deploy. And then deploy when the Ironfly, let's say the Ironfly, sorry, your VIX stands at 25. Now the probability of VIX coming down is very very high, because it moved from 10 to 18, from 18 to 22, and from 22 to 25. Now you can deploy your third Ironfly. See, saying is very easy, friends, but you have to do that. You need to have the third, right? This will have more range, because VIX stands at 25, right? 25, right? You will get more premium. Your Ironfly will have more. So maybe you might be able to mitigate your trade one Ironfly one loss, and the second loss. At least you will be able to cover your losses from the third fly. So this is the way we need to trade. Your trading style should be like, you should not be looking for profit here, right? At least try to mitigate the losses you incurred in your two Ironflies, because whenever you deployed the Ironfly, the VIX went up. Rising VIX is not good for Ironfly, right? And falling market, actually, right, falling market is not a good combination for Ironfly, right? Whenever the market falls, the VIX will increase, right? Whenever the market falls, the VIX will increase. So increasing VIX will create more panic for your sold positions, right? What I mean to say, this combination is not good, meaning, right? Maybe if market falls slowly, right, zigzag moment like this type of market, at least you can sustain, right? Because the VIX will not rise. But this kind of market, let's say if market falls like this, right, this will give you 1000%, it will give you loss, because falling market will increase the VIX. At least this will increase the wicks, but not in a such good momentum. Okay. So we have discussed about when to deploy the Ironfly, right? I've shown you now how to. And one more thing, friend, this is very important, right? So whenever the gap up, see, whenever you deploy the Ironfly, right, when we have like 3% of gap up or gap down, right, your Ironfly will give you loss for sure. Because let's say, if you're, say, I'm just manipulating that, your market stands here. Let's say you have a huge gap up, let's say 2 to 3%. I'm just trying to manipulate, right? 2%, right? You will end up into huge losses because we are not giving time for the theta overnight theta decay, right? Whenever the market have a gap up of 2%, we do not have the leverage, or we are not taking the leverage of giving the opportunity for the theta to have its decay, right? The next day when the market gaps up 2% or gaps down 2%, right, will not get the theta benefit, because theta, right, theta gradually increase, right? This is the theta, right? Your cycle will be theta cycle will, right? It will gradually, this is your Thursday, your Friday, right, Monday, Tuesday, and Wednesday, Thursday, right? Because theta gradually increase. So whenever the next day market gaps up, right, you will not get the theta, because your theta decay happens majority of the time between Wednesday and Thursday, right? This is you have to know, whenever you have huge gap up and gap downs, your iron fly will show you, right, maximum loss. So let's say your maximum loss is like 1,200, it will show you like 1,200 because of the not getting the theta benefit. All right. And now, how to deploy the what do we say, how to deploy the iron fly, right? We have already seen how to deploy the iron fly, right? I'll show you in terms of the graph. Okay, how to deploy, 1 second, give me one minute, right? So let's say, already we have discussed it, let's say your market stands here, right? This is your current market. This is a best potential way for us to go for Ironfly, because market can come down, right, or market can go up. So it might take a resistance here, it might take a support here. All right. So this is your Ironfly. So whenever the market stands here, right, you need to know what is your resistance and what is your support. So let's say market stands here, what is it, 35,000, right? See, let's assume this as the bank nifty, because the reason why I took Britannia is, if you go to my bank nifty, I have plotted all the this thing, my, what do you say, the the support and resistance. So this will get confused. So for that reason, I've taken the Britannia, right? Let's assume this as your bank nifty, or be it any strategy, right? Ironfly, we can deploy Ironfly in any strategy, not only for index, we can also go for the FNO stocks, right? So let's say your market stands here, right? And there is a important resistance here. Okay, let's say you have a very important resistance at 38.53, and let's say you have a very important support. Market stands here, right? Don't you think this is a very good combination to buy, to create a straddle at this current market position, and to have your break even at this resistance and this support, right? Or else take 50 points or 100, let's say this is bank nifty, right? If you have a strong resistance here, take like 100 points, you buy the edges in such a way that your break even should be here. Go like 100 points below, you buy the wing in such a way that your lower side break even should be here, right? So don't you think, market, if even market comes here, right, so that market has to take the resistance of this area and market will come down. If it comes down, you are good in your trade. If it breaches, and even if it breaches the next 100 points, so then you have to start doing your adjustments, right? Deploy the Ironfly in such a way that, take the help of the chart, right? Deploy the Ironfly in such a way that your wing should be at the critical resistance and buy. All right. So what do I mean to say, right? So we end up doing unnecessary adjustments. So see, looking at the past few months, okay, let me see. Don't you think this was in sideways from starting from here? See, resistance, support, resistance, support, resistance, support. It had a breakdown, right? But still, again, it is continuing with. So maybe it will continue the same way. See, it went down, right? It is again, it came to this turn, so maybe it will fly like this, right? For the next 2 to 3 months, you will have the opportunity of playing with the iron fly, right? Create the iron fly in such a way that your wing should match your resistance and also this support. So this will right avoid you in terms of doing unnecessary adjustments. So wait until your support is, until your resistance is broken. Wait until your support is broken. Once your support is broken, so then you do all the adjustments what we have discussed. All right, friends. So did I missed anything? And one more thing is, like, you might be having a question, right? So what if I told you, right, we have to go for the iron fly when the VIX is high. So what if the VIX is low, right? Let's say this is a potential, right? This is very important, friend. Okay, I'll go to Britannia, right? Let's assume this is your, let's say this is a very good area for you to deploy the iron fly, but your VIX is at 10. Your VIX is at 10, right? There is no point in going for iron fly, because at a VIX at 10, you'll get very low premium, right? Low premium means, like, your iron fly will be like this. You will not have much range. With a moment of 5, with a moment of 0.5 or 1%, you'll end up into losses, right? So the best thing is, like, you have to go for iron fly with next week edges. So you have to use the calendars. Let me show you how to use the calendar, right? I've already discussed this in other words. So let's say this is your iron fly. Let's say VIX is at 10. You're getting very narrow. So rather than going for 19th, you go for 26th. Because you know, right, if we go for 26, now I'll get it to the base state. Now check the payoff, right? Check the payoff it. So now the increasing VIX, right? Whenever the VIX increase, because VIX is at 10, right? What did we say? The VIX is at 10. So what is the high probability of VIX going up, right? Let's say this is your VIX 10. VIX will go up, right? So just to capture the advantage of rising VIX, we have to go for calendar edges. Because I'll show you last example. If the VIX increase, see, I'll get it to base state, right? Your, this is your no cost no rush. If your VIX increase by 10%, see the profit, right? Whenever the VIX is increasing, check the, right, your profit will increase like anything, just because of the rising VIX. Just because of the rising VIX. 10% move in VIX has given you a profit of 3,400. And you know, right, whenever the VIX goes up, your market will come down, right? So that will again increase your profit. All right, friends. So this is what I wanted to convey in this video. Like, we have already seen what is Ironfly, right? Here, what is Ironfly as part 1. So this is part 1.1, right? So in this we saw why Ironfly, right? Why Ironfly? We need to have a range bound market. We need to have the view of the market, right? That is, VIX view is very important. We have seen all the examples. When to go for Ironfly? We have seen, right? Whenever the VIX is high VIX, we have to go for the Ironfly. But it doesn't mean that high VIX and the wick should start falling from there. It should not go up. We have seen all the 3 examples what to do when you deploy the iron fly and the wicks is starting going up, right? And even we saw, right, whenever the wicks is low, but if you have a very good potential area to deploy the iron fly, you have to go for next week edges. This one, next week edges, to get the benefit of the rising wicks. All right, and we have seen how to deploy the Ironfly by making use of the chart, by making use of this chart, right? This is, don't you think this is the shape of the Ironfly, right? This is the horizontal Ironfly, but actually you should visualize your Ironfly with your chart. This will help you, friends. Seriously, this is your triangle format. Don't you think? Again, I'll take the red color, right? Don't you think this is your triangle format? This is your Ironfly, right? See, this is your triangle format, and then these are your wings. And let's say if I plot a diagram like this is your iron fly, this is your loss area, limited loss, right? This is your triangle format, your limit, your green zone, right? We are showing it in the vertical form, but here we are seeing it in the horizontal form. But ideally you should visualize the iron fly, right, in this way. Because you know, right, market stands here, right? If market makes a move of like 3%, you will end up into your loss zone. If market comes down at 2%, you'll end up your loss zone. If market stays between this point, right, and this point, you will end up into profit, right? This is your market, right, this way. Okay. Okay, friends, I think I've covered how, when, why, what, right? So please, please, please subscribe my channel, also share with your friends. All right, thank you.